Mastering support and resistance levels in Forex trading. Introduction. Support and resistance levels are fundamental concepts in Forex trading that provide crucial insights into market dynamics. By understanding and mastering these levels, traders can identify potential price reversals, breakout opportunities, and key areas of buying or selling pressure. In this text, we will explore the concept of support and resistance levels in Forex trading and discuss how traders can effectively utilize them to make informed trading decisions. Understanding support and resistance. Support and resistance levels are areas on a price chart where buying or selling pressure is expected to be significant. A support represents a price level where demand exceeds supply, preventing the price from falling further. Resistance, on the other hand, represents a price level where supply exceeds demand, preventing the price from rising further. These levels are formed based on previous price reactions and act as barriers to further price movement. Identifying support and resistance levels. Intermediate traders can identify support and resistance levels by analyzing historical price charts. Support levels are typically found at swing lows, where price bounces or reverses higher. Resistance levels, on the other hand, are found at swing highs, where price encounters selling pressure and reverses lower. These levels can be drawn as horizontal lines on the chart. Key characteristics of support and resistance. Support and resistance levels exhibit certain key characteristics that traders should be aware of. Firstly, once a support level is breached, it often becomes a new resistance level, and vice versa. Secondly, the more times a level is tested and holds, the stronger it becomes. Thirdly, when a level is eventually broken, it tends to act as a catalyst for strong price movements. Role reversal. Support and resistance levels can undergo role reversal, where a previous support level becomes a new resistance level, and vice versa. This phenomenon occurs when the market sentiment shifts and buyers or sellers change their behavior. Intermediate traders should pay close attention to such role reversals as they can provide valuable trading opportunities. Breakouts. Breakouts occur when the price moves beyond a significant support or resistance level. A breakout can indicate a shift in market sentiment and often leads to strong price movements. Traders can employ breakout strategies to enter trades in the direction of the breakout, using the breached level as a potential entry point or a stop-loss level. Pullbacks and retests. After a breakout, it is common for the price to pull back and retest the breached support or resistance level. This pullback provides an opportunity for traders to enter trades in the direction of the breakout at a better price. Intermediate traders should wait for a retest to confirm the validity of the breakout before considering their trading decisions. Multiple time frame analysis. To strengthen their analysis, intermediate traders can utilize multiple time frame analysis when identifying support and resistance levels. By examining levels on different time frames, traders can gain a more comprehensive understanding of their significance and potential impact on price movements. Risk management. Effective risk management is crucial when trading support and resistance levels. Traders should set appropriate stop-loss orders to protect against potential price reversals and manage their position sizes to limit their exposure. Additionally, combining support and resistance analysis with other technical indicators or chart patterns can provide further confirmation and enhance risk management. Conclusion. Mastering support and resistance levels is essential for intermediate Forex traders. These levels provide valuable insights into market dynamics and can guide traders in making informed trading decisions. By identifying support and resistance levels, understanding their characteristics, recognizing role reversals, utilizing breakout strategies, and implementing effective risk management techniques, traders can improve their trading proficiency and increase their chances of success in Forex trading. With practice and experience, traders can unlock the power of support and resistance levels and enhance their overall trading performance.